and welcome you all to the Mandated Payment Service webinar run by Maneuver, which is part of our Intersect digital program run and hosted by FinTech Australia. My name is Rebecca Shotguppy and I'm the CEO of FinTech Australia. The digital program is an opportunity to extend our reach for those people that cannot attend our in-person conference or cannot purchase a virtual ticket. The aim of the digital series is to really showcase the latest FinTech trends, policy developments, or companies at the forefront of new technologies or products. I would like to take this opportunity to thank our major sponsors, the Victorian Government, Austrade, Xero, BPay, and Data Action. I would also like to thank our digital sponsors, Maneuver, who you've got today, BDO, Argyle, and Q2. I'd now like to hand over and introduce you to Christian from Maneuver, who will be doing the presentation.
Hello, everyone. I am very pleased to be talking to you, although I don't really know who you are at this point, but I imagine there are crowds of thousands who woke up this morning feeling no headache whatsoever, having spent no time drinking with friends last night in Melbourne. But even if you are feeling a slight headache, I hope you're realizing that spending your morning thinking about smart pool transactions is the best way to cure and think more about the future again. So I am at some point here going to share a presentation, but I just wanted to say, first of all, thank you to the whole team at FinTech Australia for an absolutely spectacular in-person event, and I'm sure a lot of us feel the same. It was a success from minute one, and the fact that you now have issues with the video makes me look great. So I thank you even for this kind gesture.
Thank you so much for the kind words. I'm going to duck out now, but we really appreciate those kind words.
Of course. All right. Let me see if I can share. I'm going to press here, and I'm going to choose that one. Okay. And I'm going to see, and I'm going to ask Art, who I think has the ability to talk to me. Art, can you see this and represent everyone?
That's right. We can see. Yep.
Perfect. All right. So normally my speeches, my presentations are somewhat conceptual in terms of their titling. It can be things like the afterlife of payments that I had yesterday, where I've had presentations on payments before that we call why size matters, and lots of other things. For this particular one, I was asked to keep it slightly more maybe specific and slightly more applied. So there will be no fancy slides about the future, but there'll be some really exciting information, I think, about the present or the very near present as we move into the next calendar year. And so today we're going to talk about PayTo, formerly known as Mandated Payment Service, MPS. That's the last time I'm going to say MPS on this webinar. But if we all remember that that's what we're talking about, that's probably going to be helpful. And why we don't need to wait for open banking. So we're going to talk about a practical application of smart real-time pool payments to immediately make everyone feel at ease in case any of those words were sort of not immediately coming to mind as a, you know, what does it actually mean? So what we're talking about, pool payment, is the debiting of a transaction. And now my expectation is that people who've chosen to attend this morning are probably all aficionados already. But what we're looking at is, think of a direct debit. Someone coming into your account and taking money out, rather than you coming into your own account and pushing money to where it needs to go. So we're going to talk about application and use cases. The majority of the time here, I'm hoping it's going to be a discussion around use cases and what can be useful. But as the title suggests, it's also about understanding where this fits in relation to open banking. And to carry on, therefore, the next thing I'm going to do here is just talk very briefly about background. I think we probably have some friends from the MPPA on this, and I wouldn't be surprised if there are comments or potential corrections from their camp as we go along. But at a high level, and for someone who was maybe at the time slightly on the outside, pre-2018 on the stuff, the background between on the MPP side and on the CDR side are quite distinct, but as we'll see, they'll end up in quite a similar point. So MPP launched openly and publicly on the 13th of February, I think it was, 2018, Adrian Loveney, CEO of MPPA, made a donation to Alana and Madeleine Foundation Charity for Children. And that payment moved really fast. The initial focus for this was certainly the public perception around MPP was that it would be an ecosystem of overlay service providers. And for those of you who were already deep in the fintech space in sort of 17, 18, and 19, I would say that most conversations around real time and how to access these rails are around becoming an overlay service provider. Overlay service in this case was someone who was using the rails but providing sort of native value add on top of that. So it was different from being a mere user, being an identified institution, which is what Manuva is, where we have a sponsoring institution, participant, Cascal in our case, and certainly different from being an ADI. And the overlay services that were discussed initially was, of course, the standard sort of push transaction. So that's just a very fast payment. And OSCO, which is owned by BPay, so actually separate from MPPA, provided the additional SLAs that were involved in that. The overlay service essentially was certification around being particularly quick. But there were other services coming along that you'd have a PDF attachment option. So you could attach a receipt or an invoice or something to a transaction. And then also, and this is why I bring it up, the request to pay. So for some time, there was this mirage somewhere on the horizon that at some point there would be this idea that I could send you a request to pay and you would be able to say yes or no on your banking app and the money would come my way. The way that, again, looking more from the outside, but the perception was very much a peer-to-peer thing. You could ask me to pay for my bit of last night's Patrona shots, and I would say yes, ideally, or no if I would to jeopardize our relationship. But then over time, and I think particularly probably late 19, and then throughout the 19, throughout last year, 2020, there was a shift away from overlay services, and certainly clients or prospective clients talking to us about MPP and access to real-time transactions. They almost stopped talking about becoming overlay service providers entirely. And because I think it became clear as the whole industry matured and use cases around, this is still not the pool payments we're talking about here, but just the push transactions. The understanding was that almost all use cases can be done without becoming an overlay service provider. And there are lots of difficult hurdles to jump to become an overlay service provider for good reasons, but they're only good reasons if that's actually part of your business plan. And I'd say, taking a number out of a hat here, but 97% of all conversations I had did not actually require someone to become an overlay service provider. But this idea of a request to pay, this idea that the system, the infrastructure wasn't quite complete until you could also have some form of a real-time direct debit lingered on. Early, I mean, even before that shift happened publicly, there had been a decision to work towards what became known, okay, clearly I'm saying it again here, mandated payment service. And that then changed name just a few weeks ago on the 30th of April to MPS, to PayTo. And so PayTo, as we'll talk about, real-time direct debit in its simplest form, but with other use cases. And then separately, so that's all within the MPP and MPPA world. Separately to that, there is then the CDR open banking backstory that ends up being at points confused, but I think even if it isn't always clear where the line is between those two, it is possible to draw a line. And it's also interesting to understand why is it that through consumer data rights, we end up with a conversation around sort of the same thing, the movement of funds from my account by someone else. And here, super quick backstory, and here I've been less involved than I have been on the MPP side, but consumer data rights is a broad policy, even I'd say sort of really broad democracy take on what we as consumers have the right to control. Open banking being one part of it. It's not certainly therefore the only thing, but it's the first thing. We already are hearing lots of talk about telcos and utility companies and all the rest of it, where our data resides, but can be potentially made available to us through third-party channels. But focusing entirely on open banking here, open banking, what is open about it is the fact that you can get access to, and you can therefore, not only can you get access to, but you can give others access to your information in a third-party environment. And because it's both logically a precedent and also, I'm assuming, an easier thing to do technologically and compliance-wise, the first focus was on read access. What that means is a third-party, trusted, certified application of some kind can get your permission to look at your bank balance in its most common form, but it can also be your address or whatever other information that's available inside your bank portal, for instance. So that's a read access. A third party can read your information and can make that available somewhere else to you or to others as you give access. And that very excitingly became sort of launched publicly last year, 1st of July 2020, when that was possible with certified parties to do that. The second part of that story, though, and this is where we get closer to the PayTo and why we've been talking about open banking when we're talking about direct debits, was the right access. So if read access is, I can read what's already there and make some use of that, analyze that or whatever I want to do. The right access, as the label suggests, is I can change what I see there. So not only can I see your bank balance and your address, I can make a change to your bank balance by, for instance, initiating a payment. And I can not only see your address, I can make a change to it because for whatever reason, you want to update your residential address, but you don't want to do it using your NAB portal. You want to use it, I don't know, your delivery portal or whatever it may be. So it's that idea of third-party initiation of something inside your banking environment that naturally gets you to third-party initiated payment. And so we have two different sets of policies, two different sets of thinking. One really pushed by the RBA, that's the MPP side. The other one by the ACCC, that's the CDR side. One with quite a specific focus around payments, well, a very specific focus on payments. The other one, a very broad democratizing effort on data rights in general, but both end up right now talking about sort of the same thing. So we have had two different roads ending up in a very similar destination. It's certainly not the only thing, of course, that is discussed, but for this webinar, that is all I'm going to be talking about. I have put real time here in brackets because, as was discussed even at the CDR roundtable yesterday in Melbourne, it is conceptually possible to imagine that a CDR-driven third-party payments initiation doesn't go on MPP rails. It is possible that you could, through open banking, initiate a transaction from someone else's bank account and for that transaction to happen on BEX rails. But I put it in brackets only because to me, while that is conceptually true, I wonder what the use case would be other than if it's a conversation around cost. And if it's a conversation around cost, then there are way simpler ways of dealing with that, like for instance, reducing the cost, than to bring in, complicated business logic around what kind of rails you're moving funds on. And very rapidly, while we might not be quite there yet, but I think by the end of this year, no one's ever going to choose something that isn't real time. I just can't see it. I can't see it in a consumer sense, and increasingly, I can't see it in a business sense. Why ever would you choose actively to go slow? And other than if it's a cost question. But as has been discussed over time, the more we adopt MPP and real time as our default position in transactions, the more likely it is that cost will come down as investments are recovered, etc. I won't be having a cost conversation here, and I'm sure the others are much better qualified than I am to do that. So why does it then matter? Like, why are we even interested in this? And generally, again, when I talk about payments, because it is frankly really, really boring to almost everyone, one has to have some sense of relevance to people's lives. So I'm not going to go there. I'm going to assume we all understand why it's important. But at the moment, if you think of the infrastructure around payments now as really having progressed really fast since the launch of MPP into something that is maybe not world leading on every front, but certainly holds its own and something we can all be very proud of. There is this one really annoying bump on this super speedy highway, and that is the direct debit which obviously hasn't been included so far. And God knows how many conversations I'm having with existing and prospective clients and other stakeholders about, yeah, we know it's direct debit take 3 days, but what can you do about it? And at the moment, you can't do anything about it. It is that one roadblock. And consumers and businesses, merchants and others are, and I've seen a big shift in the last year, I'd say, are just assuming that surely there's a reason, like surely there's a way of getting around it. And at some point in the conversation, be like, okay, well, so Manuva can't do anything about it. I'll see if I can talk to someone else. But the answer is always the same. You can get something that is slightly open banking-ish by screen scraping and other things, but at heart, the fact remains a direct debit takes up to 3 days to clear. So we want to do away with the last bit of the Stone Age, put it in a great museum somewhere, the Museum of foregone and bygone payments innovations that played an important part in the past, but that we no longer interact with on a daily basis. So let's talk about the use cases. So the way I look at these real-time smart pool payments, and this is going to be a simplification, of course, and I'm hoping, and I'll look at Art in a little while here to see how many we are. If we're not a huge crowd, which I wouldn't be expecting, then I think it probably makes sense for us all to be able to speak to each other later, and we can have a conversation around these use cases and other things, rather than just chatting. But I think of them as being 4 use cases for these smart real-time payments. And in some form or another, every other use case that I hear about fall into one of these 4. But I'd be really interested in finding out if others have had others in mind and encountered others. Well, first one is the really simple one, real-time direct debits. It's literally replacing our direct debit functionality that goes through the BEX batch system, and where, as we know, it takes some time. And the nuisance with direct debits, while they've been great compared to whatever was before, is not only that money takes a while to arrive, it's that you don't even know whether money will arrive until a while. So you might find out after 2 days or something that the money that you thought was coming isn't coming, and then you have to act at that point. So in its simplest form, PayTo transactions are going to be able to replace that, and I cannot see any other outcome than it's going to replace them in its entirety. Again, why ever would you go for something else? In a slightly more, maybe slightly less obvious, but it doesn't mean it's slightly less more complicated. At the base here, we're doing the same thing over and over again. It's a real-time funding of large volume disbursements. So what I'm thinking about here is, at the moment, if you are doing, say, payroll or paying out dividends or superannuation, whatever it may be, where you have large disbursements that are happening still in batch, as some of you will have heard from my talk yesterday, I think batch is gonna die pretty quickly, but as long as it's around. Well, at the moment, the way that you prepare for that batch disbursement is either reasonably fast but manual. So you can, for instance, pay your payroll company the amount they're going to pay out on salaries using an RTGS, or if you think that's a bit expensive and you don't really mind paying the day before, then you could do direct credit, or you automate it somewhat, but then you have to wait for the 3 days. So on Monday, you authorize a direct debit on your account so that you can pay stuff out on Thursday. And while, if we're talking about small amounts, then that's not necessarily a huge issue. I mean, it's not elegant, but it's not necessarily a big issue. But if we're talking about large volume disbursements and large value disbursements, then it very rapidly becomes a treasury question. It's suboptimal to be having money either in transit or sitting in the wrong account for even a few hours if we're talking large enough volumes here. And so what PayTo can do is not only can it make it immediate, you fund that is the salary disbursement 4 seconds before the salaries go out. That's really cool. But the second bit here is that you can make that automatic. So not only do you fast, you do it automatically. So you don't have that sort of trade-off of either it's reasonably fast but manual, so RTGS, or of course, sorry, I should say, you could obviously do just a push MPP transaction at the moment, but that still isn't automatic, or you automate it, but it's slow. So with this, you get both. You get the cake and you get to eat it. No, that's not the expression. You get to keep the cake and eat it at the same time, and everyone gets super happy because they get paid dividends or salaries. So that's a second type use case. Again, the PayTo mechanism behind it all is the same in all these use cases, but used slightly differently. The third one then is sort of custodial compatible payments automation. And this is where we're starting to stray slightly further away from an idea of competing for direct debiting gyms or subscription payments or whatever it is that direct debits obviously have a extremely strong and well-deserved dominance in at the moment. Once we start getting into territory where custodial arrangements or trust account arrangements are important, so that can be in wealth management, in superannuation, real estate bonds. I'm sure we can think of a long list here. Payments automation has been nigh impossible so far, or at the best you might have been able to automate one part but not another part. And again, to me, any chain of automation that has a manual person in the middle is still a manual process. And that's because third parties, again, such as Manuva, but any other party where you might hope to automate these, with whom you might hope to get these automated, are not allowed to touch funds. So within the arrangements here will vary depending on the legal and compliance requirements, but at a high level, third parties can't touch funds. And it's not just you can't touch it and hold it, you can't touch it for 3 seconds. Between the trustor and the trustee, or the trustor and the investment account, whatever it is, they cannot be anyone else. And so what PayTo can do here, which is where I think it's properly forward-looking and very exciting for all of us in payments, is that you separate the two parties that are part of the PayTo infrastructure and PayTo arrangement, which I haven't brought up yet. So you separate, actually there are 3 parties, that's the cool thing, so I should say that. You have the payer, so that's the one being debited. Again, think of a direct debit setup, someone's being debited, that's the payer. Also in the PayTo scenario, someone's being debited in real time, but you're still the payer. And then you have the initiator, which is in the direct debit setup is also the one who receives the funds. Like Manuva sends out an instruction to debit an account with ANZ, that money is debited from the payer's account and comes to our account, and then we can help our clients disperse somewhere else. But the really cool thing with PayTo is that as an initiator, I don't need to be the receiver. So in that instance, our clients can send us an API call to debit Jane's account and send it to James' account without us ever touching the funds in between. They don't go through our accounts in any form. We get all the information, so we understand the transactions happen. We're able to report on it, reconcile it, and all the rest of it as appropriate, but the funds are never in our ADI partner's bank account in the background. And that makes custodial compatible payments automation possible, because all of a sudden you can have a trustee moving funds from a trustor's account using Manuva straight into an investment account or superannuation account, whatever it is, without ever touching funds. I should say here, I've not sought legal advice on this yet, and there might be someone out there who is contesting this, but at least at the base level of we're not touching funds, if that is the main concern, that is no longer a concern. And it opens up a whole world of payments use cases and payments automation in a part of our industry and our economy, which sees enormously large payment flows. I know from one conversation I had about 1.5 years ago with a very large wealth management company, where they needed to have individual staff members logging onto 16 different ADI banking portals, because that's where their trustors were banking, with those trustors' personal login details to move funds from those accounts into whatever other accounts. That was the only way they could move money. So with this, all of that goes somewhere else, and all those people can think of much more visionary things to do, and servicing their customers even better, with even better returns, etc. The fourth one is repeat use e-commerce. So ever since the advent of e-commerce, cards have held absolute dominance. I mean, whether it is in a direct sense or an indirect sense. Talking about PayPal or something like that, but there's almost always a card somewhere in the background. With this, I cannot see any reason, if you can do real-time direct debits, again, I'm paraphrasing it here, but if you can use PayTo to direct debit someone in real time in a controlled environment, so there are the mandates, which I haven't really spoken about yet, and the merchant receives the funds real time. So with cards, you get the guarantee of money, but it might not settle until, I don't know, a few hours, the next day, or whatever it is. Well, why would you as a merchant not choose to be paid in real time and get usable funds immediately? And also as a consumer, if you can control the mandates and you've already set up a mandate, so again, it's repeat use. It's if you go to eBay and you like to come back, you set up a mandate once, you set it up appropriately, so it falls within your parameters of amounts and everything else, then that seems to be a much easier way of doing it than saving a card and then approving on an ongoing basis. It's also likely to be cheaper, as said, for at least the merchant and possibly for you. The whole idea that you'd have to pay some kind of surcharge on top of it would disappear. Non-repeat use e-commerce, so single use, where you visit a platform online to buy something once and unlikely to come back, is probably unlikely to be solved for in the first iteration of PayTo, as I understand it, because the mandate creation still requires the mandate can be created in that environment with eBay, but it has to be authenticated in your banking portal. So you need to leave the environment, go to the bank, authenticate, and then come back. But I understand, but I stand to be corrected here, that there is thinking about making the authentication possible in some kind of iframe that pops up and doesn't take you away from the environment where you are, eBay or elsewhere. So in many ways, what I'm said, this last slide is probably the most substantive bit, but we'll carry on briefly to actually do the comparison shortly here, and then I'm going to open up for questions and discussions. Well, so PayTo open banking payment. Well, in some ways, unless we're vested to a particular institution, it doesn't really matter. I cannot really see a reason why one of them would be intrinsically better than the other. There are differences, but they have a lot of similarities, and those similarities that we're really interested in as payments initiators. The real-time in brackets thing is possibly one of the larger ones, but again, it's probably something that can be resolved very, very quickly. But PayTo is happening mid-2022 and open banking isn't. The right access, I should say. And since we have a tried and trusted real-time infrastructure that has done an awful lot of good to not just us as payments businesses, but importantly to our clients and to our clients' customers, and to changing the expectations of how quickly money moves, I see absolutely no reason why PayTo wouldn't be what we're thinking of when we're thinking of smart pooled transactions. But there are, of course, ways for them to work together. And rather than competing in a space that isn't huge seems unnecessary, and I don't see here any obvious consumer benefits from it. But they have different strengths. I mean, CDR is really, really strong on consent for obvious reasons. It's consumer data, right? So the consumer has to have absolute control over what data is shared and what isn't. And it might be possible here, and this is my own personal opinion, but it might be possible here to combine aspects of the consent structures, at the very least make the PayTo mandate creation compatible with CDR consent structures, but then using, for obvious reasons, the PayTo payment infrastructure. And yes, it is possible to imagine you can choose infrastructure, but again, I don't really see the advantage of moving away from the best thing that we have in the land. So my hope here is that we will work together, but in the meanwhile, we don't have to wait for open banking. We don't have to wait for right access to become a thing of reality. We will, at that point when that is possible, and we can amend our email addresses and bank accounts, whatever it is, in our banking portals from a third-party app, we will long already have gone accustomed to pool transactions to happen immediately. And I frankly think push transactions are going to be pushed out of the market entirely in the next half decade or so by PayTo. Find out more, obviously, I think the best place to find out more right now is going to be the conversation we're about to have, but otherwise manuva.com is a helpful place for some questions, and I'm always very keen to hear from all of you and other people who have an interest in the field. Art, what do you think? Are we a group of a size that we can manage using audio?
Yep. Let me unmute everyone, and then we can go from there.
And maybe people can be muting themselves if you think you're going to be a quiet participant.
Okay, sounds good. I'll do that now.
So I would be really interested in hearing people's thoughts, ideas, questions, and for this not to be a discussion necessarily with me, but with each other. I think we all have an understanding of what we want, and probably lots of clever people around the table.
Okay, everyone's on. Has the ability to chat now, so just click on your microphones, unmute yourself, and then you'll be able to talk.
I will turn to the use cases in case that forms of you. Equally, we've all had lots of webinars and talks and stuff. If there's no one with any additions here, whether there are corrections to what I said or suggestions, we'll call it a day in a few moments. Anyone from MPPA with something to add?
Thanks, Christian. Can you hear me? It's Katrina from...
Hi, Katrina. Yep.
Thanks, Christian. I think that was a great presentation and great to see your perspectives on what PayTo will deliver and how it kind of intersects with CDR. And certainly, if people are interested in learning more about the service, we can make more information available. Send us an email to info@mppa.com.au. We're certainly keen to hear from potential users of the service and kind of help people get prepared. But we're certainly very excited about what we think the service will enable and what it'll do, and we see it as being transformational in terms of the next phase of payments in Australia.
Yeah, I couldn't agree with you more, Katrina. I think 13th of February 2018 was a big day for that foundation as well as for the rest of us. But I don't even know, can you say that something that requires the first is bigger? But I think this is going to be the biggest change to Australian payments infrastructure for a long, long time. And I think it's going to be absolutely, to use your word, absolutely transformational. I think it'll change profoundly how we think of a payment, because I think everything is going to be a full payment pretty quickly. Any other thoughts, questions? All right. Well, it has been a pleasure speaking to you this sort of morning after a big night. I'm sure I met lots of you over the last few days in Melbourne, so thank you for the conversations that we might have had, and looking forward to hearing from you in some form over the next weeks and months.
Thanks, Christian.
Thank you very much.
Thanks, Christian, and thank you everyone who attended. Enjoy the rest of your day, and see you this afternoon if you're attending the next session.
Cool. There seems to be someone on the chat, is that right? Maybe before we... Oh, no, there's just
a couple of thanks from Jennifer and Louisa. Yeah.
I wanted to draw everyone's attention to those two before we hang up. I thought it might be questions. All right. Thanks, Jennifer. Thanks, Louisa. All right. Bye, everyone.
Bye.